Hi, thanks for checking out another episode of 10-Minute Insurance Tips with Chris. Today I'm going to be discussing moving out for the first time, getting renter's insurance, or if you're purchasing a condo or a co-op. So my name is Chris Chinuski. I'm a licensed property and casualty insurance agent at the Wasiczko Agency. We are licensed in New York, New Jersey, and Connecticut. All right, so congratulations. You're moving out for the first time and you're getting an apartment, and your landlord says that you need to have renter's insurance. And what they're concerned about is the number of $100,000 for liability insurance. Um, and you look at this in your lease contract and you don't know what that means. So, why do you need renter's insurance? Why does the landlord want you to have it? And what does that do for you and for them? When I first moved out, I always assumed that the landlord owned the building. Obviously, if they have insurance for their building, I assumed that that insurance cover policy would cover me and all of my belongings. And boy, was I wrong. So, as the tenant, the the landlord's policy does not cover anything you own. On top of that, if there's anything where could be held responsible or liable for injury or damage to other people's property, the landlord's insurance policy doesn't cover that either. So there's the two main aspects of the renter's insurance. There's property and liability. So liability, basically, that means that if you are held legally liable, or if some way you are found responsible for either injury or property damage to somebody else's stuff, basically it's your fault. At the end of the day, you had some role in it. Your renter's insurance policy could cover that claim. And the property coverage is going to help replace anything that's damaged or stolen that you personally own in the apartment. All right, so that's all great, Chris, but what's it actually mean in reality? All right, so liability insurance. Let's say you've got people coming over and you're going to have, just a few friends over to watch a game on TV, and there's some water gets spilled in front of the kitchen sink. All right, so the floor's wet. Nobody notices it. All of a sudden, there's somebody that's a little older, maybe not the best balance. They go to the kitchen sink and they're in front and they slip and fall. As they fall, they break and shatter their arm and twist their ankle, and you have to call an ambulance. They have to go to the hospital. There's lots of medical bills. I know it's a little far-fetched just to slip and fall in the kitchen, but it's actually very feasible. So what would the renter's insurance do for you? The liability aspect would cover the claim if they were to sue you for any of those medical expenses or the pain and suffering associated with it. So that's if somebody falls in your apartment. So why does your landlord care if you have liability insurance? Well, like I said before, it's going to cover any property damage. So let's say an example is you leave for work in the morning, you turn your dishwasher on, and you leave for the day. What you didn't know is after that dishwasher was turned on, that water connection between the dishwasher and the water main broke, and water just poured out for hours from your apartment, and it eventually soaked through the ceiling of the apartment beneath you, and it damaged their entire kitchen. So your downstairs neighbor comes home from work and finds water just pouring everywhere. Their kitchen table is destroyed. The ceiling has a huge hole in it, and they don't know what to do. They call the landlord. Well, the good thing is your liability policy could cover this. Now, why would your policy cover it? Because you were the one using the dishwasher. You may be held partially or fully responsible, depending on the situation. And your policy could cover one, your neighbor's goods, but also repairs to the apartment itself. So that's two examples of how liability insurance could help you out. Now, the liability insurance, it starts with $100,000. I typically I don't recommend starting with a minimum. There's two reasons for that. If somebody is going to sue you, and now, 21st century, lawsuits typically are over $100,000. So I recommend $300,000 as a starting point for one, because the higher claims, but also most insurance companies, if you're going to have an umbrella policy, they require the liability of the renters or homeowners or condo or co-op policy. That has to be a minimum of $300,000. I'm going to talk more about umbrella policies in another episode, but just know that if you want the umbrella, you have to have a higher level of liability insurance than what that base is. All right, so we talked about also the property coverage, right? So this policy isn't just if somebody sues you, it's going to cover your things. Now, the question is, how much do you need for your stuff? This is a number that you're going to have to come up with on your own. You're going to talk to your agent, and you can figure out what's appropriate. Renter's policies typically start around $20,000 for personal belongings. Now, I have a lot of people that are moving out for the first time, and they say, I need a bare minimum. I don't have that much stuff. And you might think that you don't have that much stuff, but this is why it's important to do an inventory and find out how much you actually own, right? So it's easiest when you're moving because you've got all your stuff together. So just go through the living room, look at the living room. All right, you got a sofa, you've got a coffee table, you've got a TV, all of your electronics. Then you go to the dining room or the kitchen and you say, all right, there's a table and chairs. Maybe you have a china hutch. Then you go to the kitchen and you look at everything in the cabinets, right? All of those dishes, all the pots and pans, the silverware, all the small appliances, all of those are your personal property. Go back to the bedroom and you look at, all right, you have a bed, your dresser, nightstand, um, any other furniture, if you have decor, drapes that you're putting up. Now, the biggest thing that people own that they don't think about when it comes to value is how much clothes you have, right? If you look at your dresser and look at all those drawers, every single t-shirt you have, undergarments, and then you go to your closet and you open the closet and you're like, oh, look at all the shirts and the pants and maybe dresses and shoes. All of that adds up. Now, when doing an inventory, you don't have to be specific and itemize every single item. But what I would recommend doing is getting a ballpark average of, let's say, polo shirts on average are $40, pants are $50. If you have a dress, it's $50. And just do a tally of how many of each you have, and that'll be able to help you out figuring how much clothing you have. Right. So when you're also in the bedroom, typically you're looking at an office, right? Maybe there's a desk and a computer in there. So all of these items, you want to make sure when you're doing your property coverage that your policy has enough to cover what you actually own. Another thing to talk about with the property aspect of it is replacement cost, right? So what this is going to do is replace all your old stuff with new. Let's say your sofa is 10 years old and brand new, it was $800, but it's not really worth $800 anymore because now it's 10 years old. What replacement cost coverage is going to do for you is not take into account that it's 10 years old. They're going to give you the money as if it was brand new. So basically, buy you a new sofa or $800 worth of a new sofa, even though it is older. They're not going to take into a depreciation. All right, so if you want a copy of how to do a home inventory, feel free to email me directly at chris@wasiczkoagency.com. In the subject line, just put the word inventory. Say that you saw this and you'd like a copy of the inventory. I've got a great PDF. It's a fillable PDF that calculates everything per room, then gives you a total at the end of how much coverage you would actually need. All right, so in a nutshell, that's what your renter's insurance is. So let's say instead of renting, you're going to buy a condo or a co-op. Congratulations, you're going to be an owner for the first time. It's a different policy than the renter's policy, but it's all the same coverages. The only difference is we're now going to add coverage for the building, the dwelling, the unit that you own. Now, if it's a condo or a co-op, your insurance isn't going to cover the entire building. It's just a portion that you own. It's important to understand what that contract says prior to purchasing. A lot of times you hear it's quote unquote studs in. So what's that mean when you own studs in? That means the sheetrock you're responsible for, all the electrical appliances or the electrical outlets, but not the wiring in the wall. All the plumbing fixtures, but not the plumbing in the wall. You're typically responsible for in the kitchen, all the countertop and cabinets and appliances, all the windows, any floor coverings, all of that is part of the dwelling. So when you get property coverage for that, you're looking at the dwelling. How much do you need? In Westchester County, New York right now, on average, I say $100 per square foot. Now, it's something where we actually need to look at the unit to make sure that that's accurate, because if you have an apartment or you're buying a condo that has all granite countertops, right? It's a beautiful apartment, but it's above standard grade. It's granite countertops, custom cabinets, really high end. $100 per square foot probably isn't going to cover what you have. That's where it's important to have a discussion with a professional, make sure that we're calculating accordingly, to make sure you're covered for what you own. The condo and co-op policy also has a thing called loss assessment. All right, so I explained that your policy covers what you own. Now, the condo building or co-op building has a policy that covers the rest of the building, everything outside of the units. If they have something happen, what they do is they assess each individual unit a loss assessment. Now, there's $1,000 loss assessment built into the policy. So if there's an assessment from the association to you, the policy will pay automatically up to $1,000. Now that can be increased incrementally in $1,000 increments, and it's not expensive. We're talking a couple dollars. Make sure that you talk to your insurance agent. If you want me to take a look at it and review, feel free to reach out. I would love to let you know that, what the difference in cost is. Like I said, it's essentially just dollars for that extra cost, and it can really help out if there's a large claim for the building. Instead of being assessed $5,000, where you're paying $4,000 out of pocket, you're only paying a couple dollars extra per year. All right, so in a nutshell, if you're renting or moving out or buying a condo, hope you got something out of this. Like I said, next time we're going to be talking about umbrella insurance. Tune in. We're also going to cover the basics of auto insurance. All right, and I just want to thank you again for checking out an episode of 10-Minute Insurance Tips with Chris.